Good morning, everybody. Welcome to the Moving Markets Podcast. I am Jeffrey Dunyon, your host. It is Friday, August the 15th, 2025. Stock market has been open for almost exactly 30 minutes right now. Mixed picture this morning on the stock market. I would say very mixed picture. You've got the Dow Jones Industrial Average actually having what looks to be a pretty decent start to the day, at least. The NASDAQ, not so much. Not getting the kind of move up on the NASDAQ and the S&P that we would like. So, and the Dow Jones Industrial Average, I believe I'm checking on another screen right here, but I believe the primary reason the Dow is having the day that it is United Healthcare. United Healthcare, which is, I think, second or third heaviest weighted stock on the Dow Jones. I know that Goldman Sachs is by far the heaviest weighted, $739 a share. Travelers is $269 a share. So that's a little bit less than UNH. I think Visa is the other one that is heavier weighted, $238 a share. But UNH is $300 a share stock, and it's up 10%. And that's the biggest reason right now that the Dow Jones Industrial Average is having a strong move to the upside today. There's other stocks that are up. I think overall the Dow is kind of split with Goldman Sachs being the biggest sell-off today. But dollar-wise, the biggest sell-off. I think the biggest percentage sell-off would be Cisco, but they're a much lower weighted stock on the Dow. So mixed picture right now. NASDAQ looks like just in the couple minutes I've been talking, it's gone from being down 90 to only being down 59. So maybe a little bit of a rebound taking place. The sales report came out. The sales numbers came out this morning, and retail sales, I'm on the wrong report there. Retail sales were pretty much in line with what was expected, and the word is that that's showing a stronger consumer than maybe some people expected. What the bigger story was that the prior month that came in at 0.6 was revised up to 0.9. That's a pretty good move to the upside as far as the revision goes. But the consensus for retail sales was a 0.5% increase month over month, and it came in right at 0.5. So that was good news because there was some concern that maybe that number would come in weak. We had the PPI numbers yesterday that really caused some concern and some consternation with a lot of people. Those numbers, everyone wanted to see those numbers much better than they were. Even if they were still a miss, they didn't want to see that bad a miss. And I'm not going to rehash this in detail. Yesterday, I spoke enough about the two different camps on the PPI numbers. The one camp being that this is inflation that is going to get passed on to the consumer within the next month or two, and the other trend of thought is that this is evidence that retailers and wholesalers are absorbing the cost of the tariffs and that it's not being passed on to the consumer. So we'll see. Time will tell on that. It's really going to be next month's CPI data that tells us if this month's PPI data was kind of the precursor to some small inflation spike. It would really destroy the president and the administration's narrative about everything is okay, nothing to see here as far as tariffs go, if those prices get passed on to the consumer. And I believe some of them will. It's going to be, how much. That's what it's really going to come down to, how much. Otherwise, there's not a whole lot going on. Right as we came online, the consumer sentiment numbers came out. I have not even looked at these yet. Definitely a little bit of miss on consumer sentiment. The consensus was expected to be 62.1. It came in at 58.6. That's still that's still slightly better in terms of more people think the economy is on the right track or the sentiment is good than those that think it's bad. So that's certainly a little bit of a plus that the number was still above 50. You get really concerned when that number is below 50, but definitely a little bit of a miss there. So all of this creates a more difficult decision for the Fed coming up when those PPI numbers. Remember just earlier this week when the CPI numbers came out, it changed the Fed Fund Watch tool, which is the betting market's best guess or estimate or what they're thinking about whether or not we're going to get a rate cut in the upcoming Fed meetings, and it changed that number from like 82% up to 99.1%. It dropped yesterday on the PPI numbers. This dropped all the way back down to 80 something percent. But now here today, it's back up to 92%. And I think that's because the retail sales numbers didn't come in, horrible and overly disappointing. And that revision up, I think, helped a little bit. So still a very, very strong sentiment towards a rate cut in September. But the picture is murky. It's a little bit uncertain, and it's especially uncertain with the political clown that we have as the Fed chair right now. I've become more soured on Jerome Powell in the last few months than I ever have been. There have been times when I have been super critical of him. There have been other times when I've wanted to give him a little bit of a benefit of the doubt and say, well, yeah, he's got a tough job. He's trying to thread a needle every time he speaks. He's doing all right. I was really disenfranchised when for a full year he lied, and it's flat out lie. It's not anything about him understanding the data one way versus what other people understood it. It's not. It was a flat out lie when for a year, I think back in 2021, 2022, him along with everyone else in the Biden administration just blatantly lied to the American public about inflation being transitory. They knew damn good and well that there was nothing transitory over the inflation situation, and they just, bald-faced lied about it day in and day out. Well, I turned around and gave him the benefit of the doubt on some of the moves he made over the course of the next year following that. But his refusal to take politics out of what he's doing, and he's so transparent about it. He doesn't even do a good job of hiding it. That's frustrating to me, and I'm not a fan of his in any way, shape, or form. So he's the reason I think the picture is more murky. I think there is enough going on to justify a rate cut. I thought a lot more about the PPI numbers yesterday morning, and I thought, a rate cut in either of the last two Fed meetings and their rate decision time, a rate cut in either one of those might have strongly eased the situation. It might have strongly eased the situation for the rate cut because the pressure it takes off of corporations. They refinance some of the debt that they have at a lower rate. They might be able to borrow some more money at a lower rate. That allows for more hiring. That allows for more expansion. That allows for more research and development, and potentially allows a big offset of money they're getting hit with the tariffs. So Jeff asked the question, didn't Trump pick him? What happened? Yeah, but think back to Trump's first administration. Think back to his first term. He's an outsider to Washington, D.C. politics. Now, it's going to sound like I'm a major Trump homer. I don't hide the fact that I like Trump's policies. I do think he's good for the country, and I do think he's 100 times, 1,000 times better than the moron that almost got into office. I'm disgusted that the election was as close as it was, because Kamala Harris, I believe, would have been an absolute horrific disaster for this country. And I don't make a secret of that, but at the risk of sounding like I'm too much of a homer for Trump, I still don't always like the way he does things. I don't love his communication style all the time, but generally I'm supportive of his policies. So with that as the context to what I'm about to say, think back to his first term. He hired a lot of people, or he appointed a lot of people into positions on the recommendations of Washington insiders that he trusted, and then he got burned. Think about John Bolton. John Bolton is in my opinion, a complete and total ass, and I'm sorry for saying that, but the guy is just so tainted with Trump derangement syndrome that every time he talks, he sounds like a complete and total moron. But Trump put him in a very high level position on the recommendation of other people. Jeff Sessions, who I don't have anything real personal against Jeff Sessions, but what a disaster he turned out to be for a very short time as Attorney General. I put Jerome Powell in that same category. I think he was strongly recommended to Trump. Trump listened to people that I'm sure now he wish he had not listened to. And as a result, he ended up with Jerome Powell and wishes he would have gone another way. So yeah, Jeff, I mean, that's a long answer to your question. I'm sorry for all the added context. But yeah, Trump did pick him, and Trump has said publicly one of the worst decisions he ever made. Notice how different things were at the start of this administration, and how few people at the top in terms of these political appointments have been shaken up. 200 days into, yeah, I agree with you, Jeff. Bolton is a scumbag. 8 years ago, 200 days into Trump's administration, he had already replaced 4 or 5 people in top administrative positions because he felt, I think, so burned by what they were doing and what was happening. So it's a very different situation. But the simple answer to the question is he regrets like crazy picking Powell. And I think for good reason. So anyway, I didn't mean to get off on that tangent. Let's focus. Let's go back and focus on a couple of trades we have going on right now on the spread trade side of things. We have the Palantir trade that the newer Palantir trade. I think it's still, if these numbers are correct, and I must have. I have things wrong on this Meta one because this Meta one is actually very profitable. I have my I don't have my sell and buy reverse. This meta trade, let me refresh these numbers. This meta trade is like really, I'm way up in the meta trade, almost at the point of being able to close it for a profit right now. So I'm not sure why this is showing. This has got to be wrong here. Yeah, they're okay. They're showing it's profitable. I don't know why that was the so off. The meta trade looks really great. The Palantir trade, maybe that's still up a little bit, but Palantir has had a little bit of a sell-off, which I actually think is a good thing. Palantir needed to come out of overbought territory. We're sort of flirting with danger on the MACD. I really don't think that is going to do a full-on crossover and move to the downside. And I think somewhere in this 170 range, we're going to get that bounce and go up on Palantir. What I like about it relative to our trade is I think as soon as if I believe that 170 is going to hold as a strong support level and it's not going to drop down through there, then I'm going to buy to close. I know it'll add debit to the trade, but I'm going to buy to close the short call. And in the process, and I don't have it updated in here, but we rolled that short call out to 190. When the stock got over 180, I sent an adjustment, and I forgot to put the adjustment update in this spreadsheet that you're seeing right now on your screen. I'll get that fixed today, and that will make this look different. I think even a little bit more profitable than it looks right now, because we took in more credit on the roll of that short call, and then the move back down has actually kind of improved that position. But I think what will end up happening on Palantir is we'll end up buying to close that short call, when it bounces, and we'll be in even better shape than we are right now. Nvidia is also experiencing a little bit of a pullback, and the tricky part with Nvidia is they've got earnings coming up at the end of next week. I think Nvidia reports, if this is accurate, if it's accurate, August 27th. Okay, we're a week and a half away. Okay, I think recently this said the 22nd, but it was just an estimated time. The 27th sounds a lot better. If Nvidia does not rebound, and this is a real slight sell-off, it got up here to all-time highs. It kind of flattened off, and then it's moved just ever so slightly down. I think it'll bounce one more time. I think there's going to be more people that want to be in Nvidia in Nvidia than not be in Nvidia. And so I think you'll get one little rebound ahead of earnings. And my plan right now is to actually exit Nvidia before the earnings, and then maybe going into the earnings report, do a non-directional trade, a long iron condor, or maybe a synthetic collar trade of some sort. And that way we can sort of be in a better position to go through the earnings report with Nvidia. And even if, our spread trade still looks phenomenal on Nvidia, we've made a huge profit on Nvidia, but we have given up just a little bit of it just in the last week. I think we'll get all or most of that back, and I think we'll do so relatively soon. So I'm optimistic with where we're at Nvidia. Jeff made a comment that this is the time of the year for pullbacks. Yeah, summer is usually a little, summer. What do they say? Sell in May and go away. Generally speaking, that's the case, but I got to tell you, there's so much going on in the world. There's so much going on politically. I can't wait. And I'm trying really, really hard to be optimistic, but I'm nervous about what happens with this meeting with Trump and Putin today. Vladimir Putin, I think he is amongst a handful of world leaders that I don't believe can be trusted at all. I think whatever they say, you have to go even a couple of steps beyond what Ronald Reagan used to say. Reagan was famous for saying trust but verify. He wanted to give a political opponent, a world leader, give them the benefit of the doubt, but verify what they're telling you. I think Vladimir Putin, Xi Jinping, Kim Jong-un, I think you have to be really, really careful, even trusting before verifying. I think you have to say, I think it has to be more a situation of hear them out and don't trust them at all until you can verify. So I'm interested to see what happens with that. That could affect the market, good or bad. So while, Jeff, I agree with you, this is the time of the year that it's common for things to pull back. I got to tell you right now, if Trump and Putin come away from this meeting today and there's a feeling and a sense of a clear path to an end in the Ukraine war, I kind of think these markets will take off. I think that's one of the biggest geopolitical things going right now that is holding the markets back. And I think you could see a big move to the markets to the upside on the geopolitical front if that were to happen. So yeah, I 100% agree with you, Jeff, that this is the time of the year that pullbacks are somewhat typical. But there's these world events and these other things that could really change that. So we'll see how it all plays out. All right. So good shape on the. I actually think we're in good shape on the Palantir trade because I think there's a good, strong possibility of a bounce at 170, an opportunity for us to buy to close our short call and then see that thing really take off to the upside. Nvidia, likely that we're going to get out sometime next week. I'd like to get out after a day or two that it bounces up. And so I'm hopeful that Nvidia just comes down like it's doing right now. This is the strongest visual support level is right here at 175. So I'm not at all bothered if the stock price comes down and touches 175 once or twice. If it holds 175 and bounces before the end of next week, I think that gives us the perfect opportunity to jump out once we get that little bounce. On the triple play side of things, just before I started this presentation, we had to roll AMD out. I think AMD, I really truly think AMD it is just going to give us a couple of repeats of this recent pattern. And unfortunately, our timing is bad in our trade for where we're at in this cycle. A little bit of pullback, nice move up. A little bit of pullback, nice move up. A little bit of pullback, nice move up. A little bit of pullback. I think by the end of next week, we're back into that move back up. And I think we're just stuck today and yesterday in this portion of this cycle that is detrimental to our trade. So we rolled it out. We had to spend a little bit of money to do it. We can still be profitable on the trade if AMD goes up and stays above 182.50 long enough next week, and I believe it will. Microsoft started the day to the downside. Again, this is one of the triple play trades. Microsoft started the day to the downside. It has since moved up. We are probably going to do something similar on Microsoft, but I'm going to watch it for the next 30 minutes to an hour before I roll out. Microsoft, we may be able to get a small credit on rolling it out. And Microsoft is a little bit weird right now. I mean, if I were a cardio doctor, if I were a heart doctor, man, I'd look at the way this is flattening and the way this is flattening and say, call in the blue team or the red team or whatever it is to come and resuscitate this patient. Phenomenal earnings by Microsoft a week and a half ago, 2 weeks ago, huge move to the upside, profit taking, and then it's just going dead flat. I mean, like I said, if this were a human patient, you'd say, wow, they are on life support right now. It's odd to me that this is happening. I think this fits into what Jeff pointed out, that this is just kind of the time of year where brokers and hedge fund managers, they sort of reposition, they sort of take some profits off the table, kind of wait for things to pick up again in the fall. And that might be, Microsoft might be experiencing nothing more than that. And so we're probably going to end up rolling this out, but I do believe Microsoft will get back. Right now, from where they're trading right now as we speak, they only need to be up about $1.50 for us to get our full maximum possible profit on the trade. And they're up far enough that if Microsoft ended the day right now where it's at, we would end up with a very, very small loss on the trade. I mean, very small loss on the trade. So I think the idea that they could pick up another $1.50 per share before the day is over is not unrealistic at all. I mean, not even a little bit. For Microsoft, that you're talking another $1.50 to the upside is not even 1/3%, and they could do that so easily. So I'm not quite ready to roll it out and adjust it. I'm going to watch it through the next, like I said, 45 minutes to an hour or so. If the needle is not moving, if they're not picking up a little bit more momentum and moving towards a spot where we could close them or feel like we can watch them for another hour or two, then I'll do the adjustment and do the rollout. But we're overall looking much better. The fact that they're up a little bit today is way better than where we were at just at the close yesterday. So I'll keep an eye on that and let you know. All right, I'm going to wrap up right there. Glad to be back in my office. I know last week was a little bit weird with the one audio only presentation and the other one's kind of short, but I'm back in my office all next week. And so very normal schedule next week. Have a great rest of your Friday. Have a great weekend. I will be active on Discord for the next couple of hours and then probably again about an hour before the close of the market. So if you have the ability, just keep an eye on your Discord chat, do that. And otherwise, have a great rest of your day and a great weekend. Thanks, everyone. Bye-bye.